Have you ever wondered how the digital world of cryptocurrencies and the tangible universe of real-world assets intersect? Welcome to the fascinating crossroads where blockchain meets real-world value. This is the domain of real-world assets, or RWAs, in the context of cryptocurrencies. RWAs are a game changer, a bridge between the traditional and the decentralized, the tangible and the intangible. We're talking about the process of tokenizing tangible assets like gold, pieces of real estate, or even carbon credits into tradable digital formats. This is not just a theoretical concept. Major financial institutions are showing a growing interest, and key players like Centrifuge, Franklin Templeton, and WisdomTree are bringing RWAs to the blockchain, revolutionizing both DeFi and traditional finance. Now this might sound a bit complex, but imagine owning a chunk of a skyscraper or a sliver of a gold bar, all from the comfort of your digital wallet. This is the promise of RWAs, a promise of liquidity, fractional ownership, transparency, and inclusivity. So the intriguing question that arises is, how do we tokenize these real-world assets? Let's break it down. The process of tokenizing real-world assets might seem complex, but it's actually quite straightforward when broken down into steps. Firstly, let's delve into off-chain formalization. This is the initial stage where tangible assets like gold or real estate are legally and formally recognized. This is an essential step as it establishes the legitimacy of the assets before they are digitized. Once this is done, these assets are ready to enter the digital realm. Next up, we have information bridging. Now this is where the magic happens. The tangible assets that have gone through off-chain formalization are now transformed into digital assets. But how is that done? Well, the assets' value, ownership, and other key details are encoded into a digital token, creating a digital twin of the real-world asset on the blockchain. This digital twin or token is a representation of the real-world asset in the digital space. It's like having a virtual gold bar that holds the same value as a physical one. The final step in the process is about RWA protocol demand and supply. Now that these real-world assets have a digital counterpart, they need to be placed on the market for buyers and sellers. The supply and demand of these tokens are regulated by RWA protocols. These protocols ensure a balanced market and protect against issues such as price volatility. But who makes all of this possible? Well, a key role is played by issuers like Centrifuge, Franklin Templeton, and WisdomTree. These issuers are the bridge builders, connecting the traditional financial world with the decentralized finance or DeFi realm. They are the ones who take on the task of off-chain formalization, information bridging, and managing RWA protocol demand and supply. They are crucial in bringing real-world assets into the blockchain and making them accessible to everyone, everywhere. In essence, the process of tokenizing real-world assets is a journey from the tangible to the digital, from the traditional to the innovative. It's a process that is reshaping the way we view and interact with assets. And it's a process that is at the heart of the DeFi revolution. Now that we have understood the process of tokenizing real-world assets, let's delve into the benefits and limitations of this innovative intersection of finance. The integration of real-world assets into the cryptocurrency space has opened up a whole new world of possibilities, but it also comes with its own set of challenges. Let's dive into these. First, let's talk about the advantages. One of the most significant benefits of integrating real-world assets, or RWAs, into decentralized finance, or DeFi, is the boost in liquidity. By tokenizing tangible assets like gold or real estate, we create new avenues for investment, thus increasing the overall liquidity in the market. Moreover, RWAs introduce the concept of fractional ownership. This means that you don't need to own an entire asset. Instead, you can own a small fraction of it, making it easier for more people to invest and participate in the market. Adding to this, we have the advantage of transparency. The blockchain technology underlying cryptocurrencies ensures that all transactions are transparent and can be traced back, providing a level of security and trust in the system. Finally, there's inclusivity. The world of traditional finance has often been seen as exclusive and out of reach for many. But by tokenizing real-world assets, we are creating a more inclusive financial system where anyone, anywhere can participate. However, the integration of RWAs into cryptocurrency is not without its challenges. One of the most significant hurdles is regulatory complexity. The rules and regulations around cryptocurrencies are still evolving, and when you add real-world assets into the mix, it adds another layer of complexity. Security is another concern. While blockchain technology offers a high level of security, the tokenization of real-world assets introduces new risks that need to be managed. Lastly, we have scalability challenges. As the market grows and more assets are tokenized, the systems and processes in place need to be able to handle this increased demand. Despite these challenges, the potential of RWAs in shaping a more interconnected financial realm cannot be ignored. The intersection of real-world assets and cryptocurrency is a fascinating frontier in the financial realm. We've journeyed through the process of tokenizing tangible assets, transforming gold, real estate, and even carbon credits into tradable digital formats. This innovation serves as a bridge linking the traditional world of finance with the burgeoning sector of decentralized finance. We've also delved into the advantages of this financial evolution, such as the liquidity boost it offers, the opportunity for fractional ownership, and the transparency and inclusivity it brings to the table. But as with all frontiers, there are challenges to be faced. Regulatory complexities, security concerns, and scalability issues are all hurdles that need to be crossed. Yet despite these obstacles, the promise of a more interconnected financial realm persists. Issuers like Centrifuge, Franklin Templeton, and WisdomTree are already playing key roles in bringing real-world assets to the blockchain, and the interest from large financial institutions signifies a future of significant growth in on-chain value. As we continue to explore the potential of this intersection, one thing is certain: the future of finance is set to be more interconnected and inclusive than ever before. Don't forget to subscribe, activate the bell, like the video, and share with other cryptocurrency enthusiasts. Leave a comment with additional topics you'd like us to cover.